litigation environment for corporations in the United States is now defined by complexity and intensifying risk, not just sheer volume. Legal departments face mounting pressure from rising verdict amounts, cybersecurity exposure, and evolving enforcement priorities, all within a fragmented regulatory landscape. For more than 2 decades, our annual litigation trends survey has tracked key trends and benchmarks to uncover risks, emerging dispute types, and developments in legal technology. This year's survey polled more than 400 corporate counsel from key industry sectors to share their perspective for the year ahead. Litigation risk showed no sign of slowing down in 2026. Cybersecurity remains the most persistent threat, with actual exposure in 2025 outpacing forecasts. State-level regulatory activity is increasing as federal oversight recedes, creating a patchwork of compliance challenges. Nearly half of respondents expect average verdict amounts and settlements to increase in the coming year.
What's top of mind for corporate counsel is the surge in so-called nuclear and thermonuclear verdicts and settlements. 77% of the respondents said that they were concerned about jury awards that are exceeding $10 million. And nearly 60% are concerned about those awards that are exceeding $100 million. Contract disputes resurfaced as the top litigation concern, followed by cybersecurity, data privacy, and then class actions. Arbitrations also rose, with 49% of respondents reporting that in 2025 they participated in at least one arbitration. That's up from 38% in 2024. Beyond this higher volume, 74% of the respondents encountered mass arbitration fee pressure, which was influencing early resolution.
Nearly 4 in 10 respondents say their business's exposure to cybersecurity and data privacy disputes deepened in 2025. It is not only the leading area of increased exposure, but also the only category where actual exposure exceeded last year's forecast. Cybersecurity and data privacy exposure is especially pronounced in consumer markets, energy, and technology sectors, where a larger than average share of respondents reported an increase. Looking ahead, 78% anticipate exposure in this area to increase or remain the same in 2026. Driven by evolving requirements and regulations, increasing attacker sophistication, and the growing use of AI.
Respondents experiencing regulatory proceedings decreased to 56% in 2025 from 70% the year before, but this is still well above historical levels. Expectations vary by industry. 41% of respondents in the technology sector anticipate more regulatory investigations, which is the highest of any sector. 55% of respondents believe overturning Chevron has led to more lawsuits involving regulatory matters over the past year. And while federal enforcement has slowed, state regulators are stepping up. This patchwork approach and increased regulatory uncertainty are making compliance more challenging for many organizations.
Employment and labor disputes rank second in increased exposure, with 31% of respondents reporting an uptick in 2025, and 30% expecting more in the year ahead. Nearly half of respondents cite discrimination and harassment as the leading driver, followed by disability accommodations. Data privacy and artificial intelligence are also among the contributing factors. 1/3 point to employee data management and privacy requirements and to the use of AI in hiring decisions.
The rapid advance of AI has the potential to enhance IP enforcement. However, the risk from IP disputes and proceedings has yet to meaningfully accelerate. 22% of respondents report increased IP litigation exposure in 2025, down from 27% in 2024. IP also ranks lowest in terms of anticipated risk, with just over 21% expecting increased exposure in the next 12 months. Trademark and licensing are the areas where companies feel most exposed to IP disputes in the coming year, with both cited by 38% of respondents who expect a change.
The growth rate of exposure to environmental, social, and governance disputes fell in 2025, with 24% reporting an increase versus 30% last year. Among respondents who anticipate more exposure, 45% cite political pressures, an 18 percentage point jump from the prior year. 44% of respondents expect pro-ESG regulatory pressures to contribute to increased exposure, while 40% say the same about anti-ESG pressures. But increased policing of ESG-related claims, including those involving greenwashing, rose to 43% in 2025 from 34%. That aligns with a sharp rise in the share of respondents who experienced ESG-related class actions over the past 12 months, suggesting the plaintiffs' bar continues to see opportunity in this area.
Class actions are among the top concerns for respondents heading into 2026. ESG-related class actions nearly doubled, with 30% of respondents reporting involvement in such matters over the past year. Cybersecurity and data privacy class actions continue to rise, reaching 40% in 2025 compared to 32% in 2024. However, employment and labor class actions saw a notable decline, dropping to 41% in 2025 from 58% the previous year. Join us at the annual Litigation Trends Summit on Wednesday, January 28th, to explore these findings and discuss strategies for navigating the year ahead. Download your copy of the full report at litigationtrends.com.